Hey everybody, here is your market minute for Monday, the 19th of June. The S&P is seeing a confirmed breakout above 4,200. We've seen about a 350-point breakout from the 4,100 level just in the last 3 weeks. This is a stunning move and I think has caught a lot of people by surprise. We've been waiting for this move literally forever. It seemed like it would get started and would get pulled back down in the range. And we've been watching this 4,200 range literally for months now. So it's no surprise that the breakout came from a big energy peak. And so this is why it's had plenty of energy to get going. But there's only a finite source and amount of this energy. Are the shorts going to continue to get squeezed? Do we have enough sideline money still coming in at these highs? I think the time is right for a pullback, and this is what we're seeing on the numbers here. We're seeing exhaustion on the weekly chart, and that's lining up with exhaustion on the daily chart. So this is the S&P 500. We've seen the classic S-shaped curve up to a parabolic tail. So this is about the place where we need to be very careful and expect perhaps something like a 3 to 5% pullback. Now, the NASDAQ has been the main driver of this market since those top 7 stocks of the NASDAQ have been responsible for 28% of the S&P's performance. But there's a limit to everything, and we're starting to see this now. We just have massively exhausted charts, and this is the AI bump that we've been seeing, right? Everybody's talking about this, but I think it's very vulnerable up there. Think about balancing a very heavy weight at the top of a skinny pole. It's possible to do if you keep the weight centered, but the very second that it becomes unstable, it's gonna come back down. Now, we can draw all kinds of fibs for where we would expect to see the price to perhaps come back down to. Myself, I think a round number like 14,000 might be a good target for this, for the NASDAQ to come down. Now, at the same time, this is not all bad news, because I think what we're seeing is a little bit of rotation back into the Dow. The Dow is poised to break out. Right now, the breakout level for this inverted head and shoulders neckline is 34,000. We got the very beginnings of that breakout on Thursday, Friday. So we have yet to see as to whether the Dow and the industrials, this could be energy, this could be financials, are going to pick up the ball and run with it prior to earnings, which really get started in about a month from now. Other than that, the market's kind of on its own for the next few weeks. There's really no catalyst. There's really nothing that's going to be pushing the market around. We've already had the Fed meeting. We've already seen interest rate policy. We know where things are going to be going. We've achieved rate stability probably into the end of the year. It looks like, for all intents and purposes, that we have transitioned into a brand new bull, but it needs a rest right now, and I would expect to see over the course of the next couple of weeks a little bit of corrective behavior, a little bit of a consolidation. Perhaps we see the S&P pull down to maybe somewhere like 4,300. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.